Good morning, Bitcoiners. Hello, and welcome back to another edition of your economic calendar, the news and analysis you need to start the week off right in Bitcoin. I'm Mauricio Di Bartolomeo, co-founder and chief strategy officer here at Ledn, and today is Tuesday, June 14th. We have a very special episode for you this week. As always, there's been a lot of volatility in Bitcoin markets as well as equity markets, and we're going to dive into that volatility as well, see what some of the reasons behind that volatility are, and what that could be telling us for the near future or midterm for Bitcoin prices and equities in general. A lot of that has to do with the upcoming meeting, I guess, from the Federal Reserve. They have their FOMC meeting scheduled this week where they are most likely going to be increasing interest rates once again. We're going to dive into that as to what markets are expecting and what that potential reaction could be. So grab your coffees. It's going to be a great one. So we start, as we usually do, with Bitcoin, and as we covered at the start, it's been a pretty turbulent week for asset prices in general, Bitcoin included. Bitcoin dropped 11.20% last week, closing at 26,578, and so far this week, it's down another 14.53% after reaching a low of below $21,000, and that happened yesterday. So far, it's recovered a bit. Right now trading at around $22,700, as you can see on the screen. Now, and the low that it reached yesterday was in fact a new 52-week low. If we look back at the chart, last time Bitcoin was at these prices was essentially mid-December 2020. So 18 months ago, basically. And this makes the price reach yesterday a new 52-week low for Bitcoin. Now, as many of our loan clients know, the recent drop in Bitcoin prices has triggered requests for additional collateral to maintain a healthy LTV for open loans. Now, as a result of this price move, about 6% of our outstanding retail loan book has been closed. This includes both loans that were voluntarily closed by clients and loans that were automatically closed as the price dropped and no additional collateral was received. So just wanted to give a quick update on that front as well. And if you are a Ledn client, we welcome you to check out log into your platform right now and make sure that your loan is in healthy status. Now, the move in asset prices that we're seeing, both in Bitcoin and in equities, could be attributed in part to a series of market conditions and events that have been essentially ongoing for a bit. Some of them are been ongoing for some time. Some of them are recent. So let's go through some of these reasons. One is inflation in the U.S. has reached a brand new record high. One second. Yeah, so as we see here, this is a headline from the CBC. It reads, U.S. inflation rate defies expectations again to rise to another 40-year high of 8.6%. So there's a few issues with this inflation reading in the U.S. One is inflation. Analysts had predicted inflation to ease to 8.3%. And the idea or the happy path to inflation evolution would have been that, so for example, the inflation reading in March came in at 8.5%. The inflation reading in April came in at I believe it was 8.4%. And the inflation reading for May was expected to be 8.3%. So we were expecting to see a continued downtrend on inflation. But in fact, what happened was that inflation spiked even higher, and now it is at its highest point that it has been so far this year. In fact, it's as high as it's been in the last 4 years. The highest point of inflation has reached in the last 40 years. And this has essentially thrown a bit of a wrench on some of the expectations that economists and perhaps the Fed had as well, which is why once this inflation reading came out on Friday, the markets have been reacting so aggressively ahead of the meeting that the Fed has this week. It starts actually this afternoon. And the interest rate decision will go into tomorrow. So this brings us to our second point, which is that based on the readings that inflation reading that we were just talking about, the Fed is now looking, or most analysts or investors are expecting the Fed to increase interest rates by not 50 basis points this time around, but 75 basis points. And this is a pretty big change in the expectations because it's essentially 25 basis points on a 50 basis point hike is a pretty significant adjustment to make. And this has essentially caused a lot of investors to, in light of this, start essentially reassessing some of their positions going into this Fed meeting and this potential interest rate decision for tomorrow. Now, the other issue that is keeping inflation high, which is, again, kind of the underlying issue that the Fed is trying to get to. They're trying to bring down inflation by raising interest rates and removing some of the demand from the economy. Therefore, if the demand curve comes down, the idea is that it'll basically put downward pressure on inflation. But the main problem that it's having is that the oil prices continue to soar because there is an ongoing war in Ukraine, which has caused disruptions around supply chains all over the world. And so, again, this is just a headline from the New York Times that just speaks to Russia's revenues. Again, this is just a product of their oil revenues, their oil production revenues. But this just means oil is just harder to get, and it's just way more expensive, and it's much harder to move around. And if this continues, it'll be very hard to put a lid on inflation because the price of fuel permeates into the price of every other commodity and most other goods and services. And so if you can't put a lid on that, it's really hard to put a lid on the overall inflation, and it doesn't matter how much demand the Fed destroys, the upward pressures on fuel prices are going to continue to be a tailwind on a lot of inflationary pressures just generally in the economy. And the fourth issue, which is more so a sort of crypto-related event, was in fact this news that many of you probably are familiar with already, which was that Celsius, a lending company that once had over $11 billion in assets on their platform and was deeply involved in listing alternative assets and using decentralized finance protocols to generate interest, has paused withdrawals from its platform. Now, these types of events are painful evidence that not all interest products are created equal. And there are very real differences in the risks that companies undertake to generate the interest that they offer to their clients. And these differences and these risks that they take can have very serious implications. Now, we spent some time yesterday in a Twitter Spaces giving our clients an update on our business and explaining what makes Ledn a very different kind of lender. And we thought we'd give us a summary or a brief summary here for those of you who couldn't join us into our spaces yesterday. We're just going to pop over to our website here for a second. And so I guess a few of the things that make us different here at Ledn is that we have a very simple business model. We only support with two high quality and very liquid assets, which are Bitcoin and USDC. And Bitcoin is a use case that we understand incredibly well. As myself being from Venezuela and living through the use case in Venezuela with my family, it's something that it's very near and dear to our heart. So we understand Bitcoin, the demand and the use case for it worldwide. And USDC is the most transparent stablecoin operator in the industry. They were initially formed by a consortium between Coinbase and Circle. For disclosure, Coinbase is an investor in Ledn, and not only are they two very high quality and regulated entities in North America, they also have monthly proof of reserves attestations that are audited by Grant Thornton and that can be viewed on their website. And the assets are fully backed for dollar reserves. And so that's really just having those two very transparent and very deeply liquid assets makes our business very simple. And we offer very simple products. We lend on both dollars and Bitcoin. And that's essentially, we do one thing and we do it very well, and it's to lend on those assets. We were also the first lender ever to introduce a proof of reserves process or an ongoing proof of reserves protocol at Ledn. We do proof of reserves attestations that our clients can verify, and we do these attestations with a certified public accountant every 6 months. The accountant's name is Armanino LLP. Our next proof of reserves attestation is scheduled for July 31st. And we are working on increasing the cadence of these proof of reserves attestations because we know how important and valuable they are to our clients. Another very big and important difference is that we do not expose our client assets to decentralized finance protocols to generate interest. We generate our interest by lending to a select group of well-established institutions such as Genesis Capital to get the yield or to get the interest that we pay to our clients. Also, we did not raise funds through an initial coin offering or an ICO, and we do not have a token. So in short, at Ledn, it is business as usual. But we just wanted to spend some time kind of going over that for those of you who weren't able to join the spaces yesterday. Now, going back to the markets, given the recent volatility, as you can see here, the futures curves are showing all sorts of wonky shapes. This one in particular from BitMEX is pretty wonky. Just wanted to isolate that just to get you guys some sort of optics on this. As you've known, those who have watched the show often, these curves are usually sloping to the right and they're pretty steady. Right now, we're seeing them just squiggly all over the place. And that just means that there's a lot of volatility and not a lot of liquidity, which means that asset prices are trying to kind of find their footing once again. So, implied volatility in the Bitcoin options contracts has also ballooned. It has almost doubled over the last week. Now, this again might be a symptom of low liquidity, and depending on what the Fed announces tomorrow, this could lead to more selling pressure. The Fed decision might lead to more selling pressure, and the low liquidity might lead to some more volatile times ahead. If it's any consolation, according to Arthur Hayes, the founder and ex-CEO of BitMEX, he said, or in a tweet yesterday, he said, looking on chain, it appears that liquidations have mostly happened. And I think he might be referring to DeFi liquidations, but since DeFi tokens will likely be the last ones to catch a bid or to find buyers, it could be a good indicator of an eventual change in sentiment around digital assets if and when these sort of more exotic DeFi tokens start finding some buyers and start seeing some green. Now, let's just hope that people have learned their lesson this time and that all assets and all interest offerings are not created equal. And as always, we encourage you to don't trust, verify, and ask the right questions. And as always, we wrap up with what's ahead for the week. As we mentioned at the start, the main event for this week will be the Federal Reserve's FOMC meeting and their interest rate decision. That meeting is scheduled to start today, and tomorrow at 2 p.m. is when we get the interest rate decision announcement or statement. That happens tomorrow, Wednesday at 2 p.m. Now, as we covered above, the most recent inflation reading from May has increased the probability of the Fed increasing interest rates by 75 basis points or 0.75%. The interest rate is currently at 75 basis points. So it is currently at 0.75%. With this increase, the interest rate will effectively be doubling to 1.5%. This would be the largest increase in interest rate since 1994. Now, given the reaction from the markets to last week's inflation reading, it looks as though investors are pricing in a pretty high probability of that 75 basis points interest rate hike. Now, if the Fed decides to increase interest rates by only 50 basis points, so 0.5% less than what people are anticipating right now, the market could celebrate and rally higher. But if it does pull the trigger and increases rates by 75 basis points, the market and asset prices in general will likely continue to be under further selling pressure until one or of two of these things happens, or both of them. And one of them is the main thing that the Fed is going to want to see is inflation in the US stop increasing and turn a corner and start coming down. This is what the Fed's mission is. So it is unlikely to think that it will stop increasing interest rates if inflation continues to soar. And so once inflation rolls over, this might be one of the things the Fed wants to see in order to sort of put the foot off the gas and let the economy breathe a bit and not continue to raise rates so quickly and so fast. The second thing that needs to happen, or in order to kind of bring some relief into the markets, is the war in the Ukraine needs to come to an end so that it can normalize the oil prices and other commodities. Again, it doesn't matter really what central banks are doing if there's still an ongoing conflict and oil is getting harder to find and harder to move around. This is just going to make the price for oil higher because it's very hard to bring down demand for oil. It's very related to economic activity. And so one of those two things could be it'll be important to see one of these two things before the market can engage in any kind of significant turnaround. So we hope you enjoyed reading today as always, and we wrap up with a quick summary of the data. Again, today at 2 p.m. the FOMC meeting starts, and then tomorrow at 2 p.m. Eastern is when we get the interest rate decision from the Fed. That'll probably move the market, so be out and look out at 2 p.m. tomorrow. That concludes the show today. If you don't have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning the best interest rates on your favorite assets, Bitcoin and USDC. We also have the best rates for loans if you need liquidity but don't want to sell your stack. And we are, in our most recent product, the Bitcoin Mortgage, lets you buy a house as big as your stack. Thank you, everybody. Have a wonderful week and see you next time.